After gold's 30% rally and 20% correction already this year, have we seen it all? Gold's biggest move could still be ahead of us, and they might start with a non-farm payrolls release. Gold is at a tipping point, and in this week, everything hinges on one fragile balance: the battle between US jobs and inflation. If non-farm payrolls cracks, gold could reignite its record-breaking rally. But here's the twist. The significance lies not only in the headline NFP print, but also whether traders hold for Friday's blockbuster inflation report. Hi, I'm Vani Mehta, and in this video, I'll analyze gold's technical setup and the exact scenarios you need to consider on the NFP showtime. Gold's daily chart is flashing bullish signals and the momentum is building. But now everything boils down to one single catalyst, that is the US non-farm payrolls report due to be released on Wednesday instead of its usual first Friday of the month timing. Let's break down critical technical levels that could decide gold's next big move. Gold crashed 20% and has bounced back above the $5,000 level, with the focus now shifting to heavy fundamentals. Will the US jobs data support the bulls? Let's take a look at gold's fundamental in a decisive week. Markets are currently pricing in close to 30% probability of the Fed lowering interest rates in the March and April policy meetings, with the odds for a June rate cut currently standing at about 51%, according to the CME Group's Fed Watch tool. Uncertainty prevails over the Fed's monetary policy outlook under the new leadership of Kevin Warsh as job market conditions continue to worsen. The ADP showed last week that the private sector employment in the US rose by 22,000 in January, below the forecast of 48,000. The December jobs report showed a steep drop-off in job openings to 6.54 million. The ISM Services Employment Index unexpectedly declined to 50.3, close to the contraction territory. Therefore, risks appear skewed to the downside in the January jobs data, but a trade-off between the US employment and inflation remains in the spotlight. The US Consumer Price Index data is due for release on Friday. The non-farm payrolls is expected to rise by 70,000 in January after having increased by 50,000 in December. Any number below the estimated figure could provide fresh legs to the gold upside and vice versa. Additionally, the final benchmark revision to the NFP numbers from past releases will also hog the limelight on Wednesday. The preliminary estimate of the benchmark revision released last September indicated a downward adjustment to a total NFP of minus 911,000 for 12 months ended in March 2025. Meanwhile, the unemployment rate is expected to remain at 4.4%, and unless it surprised significantly, it should have less of a focus this time around. Gold traders, these are the two scenarios you should focus on this NFP release. First scenario, the bullish trigger for gold. A negative surprise in the headline NFP print and a big downgrade to the final benchmark revision could revive US labor market concerns, affirming bets for two Fed interest rate cuts this year. The dovish Fed expectations could propel gold bulls towards the $5,340 levels, which is the Fibonacci 78.6% retracement of the 20% correction from record highs. Now, scenario 2, the downside risk for gold. If the NFP beats estimate and there is no significant downward revision to the annual NFP print, gold could resume its correction towards the $4,580 level, which is the 50-day simple moving average on the daily chart. Markets could scale back bets for a June Fed rate cut, weighing heavily on non-yielding assets such as gold while lifting the US dollar. All in all, gold is entering decision time. A strong NFP or a weak one. Either way, expect fireworks. Will NFP drive gold to record highs, or will it trigger a sharp pullback? Drop your bias in comments below. Bullish or bearish?